Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. Now, this is from Seeking Alpha, of all places, Seeking Alpha. But I told you guys their tongues will twist in their mouth. What they do is they have one analyst that is usually bullish and the rest negative. So in case the company, start doing what it's supposed to do, then they say, I told you so. This is a classic case of that. Nio Stock jumps, new model changes everything they said. Just the one new model they're claiming, the ES8. When we knew the Firefly and the L90 was also going to do it. Nio's operational shift and launch of the lower priced ES8 are game changers. Now, I will agree, the ES8, and I said it before it was even released, that the amount of revenue it's going to bring in and increase our margins will be way better than what the L90 will do. But make no mistake, the L90 is going to help us greatly as well, guys. The lower price ES8 are game changers, broadening its market and supporting the future growth. The new ES8 model launches at $58,000 with the battery, 25% cheaper than its predecessor. And some of my subscribers are telling me that the Australian albino is at it again. I am not surprised. You have to understand, he's been compromised. He's misleading a lot of people. Nasty, wicked behavior. He's claiming that the new ES8, well, he didn't say new ES8. He said Nio is lowering the prices of the ES8 to cause a lot of, disgruntled previous ES8 owners. What he's not telling you is we are not lowering the price of the ES8. It's the new model price that's coming in lower than the older model. Unlike what Tesla and XPeng and the rest does, they lower the prices of their current models, angering their current customers. This is the difference. But he's pretending not to know that. He's sick and disgusting. He makes me throw up in my mouth like when Stockmore said that he made a mistake with Nio. I wonder how does he feel now. But anyway, the new ES8 model launches at $58,000, 25% cheaper than its predecessor, not the current model, targeting the mass market with full-size SUV positioning in China's fastest growing segment. And this is why the analysts are so bullish now, because they understand that the six-seater, the big SUVs, are China's fastest growing segment, guys. Our emperor saw that and capitalized on it with the L90 and the ES8. Gross profit margin nearly doubled to 7.6% from 4.9% year over year, indicating Nio's strategic shift towards profitability is gaining traction. Despite some analysts' skepticism. Oh yes, you have some of them still pretending not to know. Management, because they need to keep the middle class right where you are. I told you guys that. Management expects Q4 monthly deliveries of 25,000 units with 20% plus vehicle gross margins. And I remember when William Lee first said that, a lot of people were saying, Money Making Mitch, do you think we will be able to meet that? Because they couldn't fathom that idea of 25,000 units in the Q4. But this is why the CEO said it would be sudden and massive. There were things we're not seeing, but the man already knows. With 20% plus vehicle gross margins, potentially achieving EBITDA break-even with operational scale. Fair value targets suggest 14.37% upside potential at 1 to 1.2 times forward sales through. Though ES8 adoption success remains critical execution risk, I remain bullish on Nio, he says. It's been a while. What's been driving the stock price to the upside was Nio's continued operational shift. He said it's been a while since he covered Nio, of course. When it's the hard thing to talk about, no one wants to talk about it. They don't want to be bashed. But what's been driving the stock price to upside was Nio's continued operational shift that I was pointing to last time, he says. As a key part of that shift, we saw the news that the firm unveiled its new model ES8 which is cheaper versus the previous models, and it's considered to compete with others in the Chinese car market. Now, guys, I wonder what will happen when the next model Onvo L90 is released and it's cheaper than what they have now. What will the albino say then? Will he still poop in his nasty little pants? I recommend the boy get some sunlight. I still do. I think this is exactly what we can call a game changer for Nio's perspective. Operational growth, because the high price mark of its past models were the main explanation for the business expansion in the past. Now it's likely to change, and Nio seems to have the needed resources to make it happen. I'm reiterating my buy, he says, waiting for new highs ahead. Yes, new highs are coming, higher highs and higher lows. My updated reasoning for Q1 2025, Nio delivered 42,094 vehicles, which was a 40.1% year-over-year increase. Sorry, guys. Excuse me for that. The market was expecting more, and the same thing is true regarding Nio's bottom line improvements. The firm missed the adjusted EPS estimate by 5 cents. It's hard to say that analysts and general market participants were expecting a strong beat from Nio, because statistically speaking, it would have been a clear outlier to what everyone already got used to. By the way, that was money-making Herbert de Leon in England calling me. Although the consensus systematically fails to assign close to reality expectations, I think that Nio did deliver some good news in its Q1 release. For example, I like the fact that their vehicle margin improved to 10.2% from 9.2% in Q1 2024. And it made the gross profit margin soar up to 7.6% from 4.9% last year. So the key margin almost doubled on a year-over-year basis. But other analysts, guys, they pretend not to see that. Which was great to see, he said, having excluded Lucid Auto from the peer group because its COGS exceeds revenues. So he actually called it right. I see that Nio's GP trend is generally in sync with what other Chinese automakers show. So this guy is on point, guys. He says, as you can see, the lag with the peers is still quite high, and Nio's GP margin should at least triple to be compared to those of BYD or Li Auto. It's not an easy thing to do, and it explains the persistent underperformance of Nio Stock versus BYD and others. But things started to change recently with Nio coming out as a strong leader. Even despite the massive misses on consensus estimate in recent quarters. Why so? I think the firm's strategic refocuses has started to work out better than many skeptics has been expecting. He says, first, the GP margin is already on the rise, and the strength of the rise looks promising in itself. Second, the company recently rolled out a new ES8 model whose price is set lower than the starting price for the Tesla Model Y L6-seat SUV at $58,000, which is going to be a 25% reduction from the previous generation. And I saw the inside of the Model YL. That's all I'll say for now. The redesigned ES8 expands from a mid to large to a full-size SUV to become the largest battery electric SUV in China, built on Nio's 12-stack technological capabilities. It was highlighted by the company as combining an expressive third-generation design for success philosophy with premium materials, bespoke interiors, and airplane-style zero-gravity seating configurations. That was a very important game changer, because a lower priced full-size SUV is exactly what Nio needed to broaden its product line and re-accelerate its delivery growth in the next few years. Luxury SUVs and SUV in general are one of the highest growth auto markets that gain market share within the auto mix constantly. And we know this was coming, guys, with our in-house technologies, that we will be able to bring out new models at an even lower price. It's great for Nio to be there and offer an optimally priced vehicle to its customers. It's adding more chances for Nio to get a much higher gross profit margin as they keep scaling on this new front, especially taking into account that over the past few years the firm gained enough technical expertise to develop some of the needed chips in-house. That's a major cost savings versus NVIDIA or NX. And they can also save up on R&D thanks to research and development cost sharing across multiple models with your 900-volt platform. A lot of people are taking that out of consideration too. William Lee explained how the cost was saved to achieve such a cost reduction, mentioning a few main aspects. Nio negotiated the cost with suppliers, lowering the procurement cost. Research and development cost was spread across multiple models, sharing the core technologies such as the 900-volt charging platform, rear motor, and in-house developed chip. The ES8 also underwent some material adjustments with a reduction in aluminum content. He says, I'd expect something close to at least 15 to 17% cost savings for the upcoming Q2, a bit higher at the midpoint versus the management guidance. And it's going to help Nio return to a double-digit gross profit margin in Q2. So it looks like the Q2 might be better than we thought, guys. And hopefully beyond that, Nio can break even on EBITDA, assuming a monthly deliveries of over 50,000 units. Guys, vehicle gross margin by 17 to 18%, and well throughout OPEX, CAPEX management. And going into the fourth quarter, we are going to introduce our all-new ES8, the next generation ES8, which is a highly competitive product. With that, we believe that in Q4 for the Nio brand, the monthly delivery will be around 25,000 units. That's around 20% year-over-year growth from last year's Q4, which was around 20% units a month. In that case, while improving the sales volume, we are also going to improve our vehicle gross margin significantly for the Nio brand to be above 20% in Q4. The shorts are getting ready to be burnt, guys. It's too early to tell about the EPS, even on an adjusted basis, but with the recent events in mind, I'm not sure that the current EPS break even for 2028 is correctly reflecting the real odds. I think Nio can now make it a bit faster, he said. At 1 to 1.2 times of forward sales, Nio market cap should be $16.02, $19.44 billion for me to call it fairly valued. Again, with the core assumption that Nio's profitability prospects are now closer to reality than ever before. This gives us an upside of 13.7 to 36.5% to the current stock price, even after Friday's surge of over 14%. So he still says there's room for way more growth, guys. Risks and takeaways. So I'm not going to go into the whole article, but I knew that this was going to happen, guys. I knew that this is what they all do. They all have one analyst that will always be bullish, and the rest, the majority of them will be dovish or very bearish to shake off the weak while the institutions continue to load. And this is why I was telling you guys, I sold most of my shares in other companies just to buy way more shares of Nio. I brought my average up in order to get over 24,000 shares. So I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we're waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.